Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Linn & Associates with your financial market wrap-up for this Thursday, the 30th of March, 2017, and we're getting on past 3:45 p.m. Central Standard Time. All right, my friends, stock market on fire. U.S. dollar explodes to the upside today. The euro currency gets smashed. Gold gets smashed as the dollar takes off, along with silver. Copper's about unchanged on the settlement price, and platinum down fairly hard. At the same time, what we had today is another gain in gasoline, and I think I've done my job here of telling you that I thought that market had made a bottom and could be moving up higher with the radios that are going to go on soon. Hey, John, do you know you can get gasoline at $2.25? Call in, folks. Tell us where the next cheap spot is, blah, blah. And I see a sign of desperation in OPEC. Let me explain my point of view with the news that came out today. I don't make this stuff up. I read all day. Suddenly, the Saudis are saying they're willing to strongly consider extending on April 21st, the next technical committee meeting out of OPEC, the production cuts if Russia will go along and commit to 250,000 barrel a day cut. And I heard that and I went, what? You do realize that last year, at the end of the year, when these cuts were going to come in, Russia had committed to 300,000 barrels a day. They haven't hit that. They're in the 160, 180 zone as of the last reports. Now, I certainly don't have privy to know what their cut numbers are today, but the fact that the Saudis came in at 250 means it's not 300,000. Desperation. They're trying to get them in there so that they can get everybody in play. Let me give you a thought. You're here at $50. What do you think happens if Russia says no and the Saudis don't do the production cut? I think you know on your own. So the idea here is the Saudis think that they have another 6 months that maybe they can get the market into balance. And it's sort of, come on, Russia. You said you'd do one thing. We'll give you a reduction of 20%. Just get to the 250,000 barrels a day, and then you can turn on your spigots when this whole thing ends. I think that's what they're saying. I'm not sure. In the Dow, you're still in a corrective weekly basis. And I know the market's up today and everybody's geared up to be bullish. But chart's a chart. You've gone from 21,162, and today you're still 500 points under that at 20,665. I was on Australian TV today. Everybody's geared up how bullish. This is a correction in a market that's broken hard. On a daily basis, the up thrust has taken place because you've got that pattern where you took out previous highs. But it's been whipping back and forth. The break went from right here, or here you can even say, down to this 20,497, you're getting a bit of a bounce. And you can see that on the charts right here as to what's going on. Certainly, if you took out this low, Katie barred the door. It could get very ugly. But you didn't. So what we have is a pattern of higher lows and higher highs. And yes, today's high of 20,694 takes out 20,678. Therefore, until you take out 20,563, yesterday's low, you have a bullish pattern in the sense of higher lows and higher highs. Unfortunately, you're under the 18-day average of closes. The two nullify each other. It's really that simple. I see nothing there to trade off of. You did a nice job of holding the lower Bollinger Band on breaks. Yes, you probed through it, but you didn't go anywhere. I'm looking for the market to move back towards the 18-day average and develop more of a sideways band. I'm looking at momentum that was oversold, now having ended a period where it's corrected. It's past tense. It's no longer oversold. So I'm looking for that 20,738 resistance level. When I come to the S&Ps, I can at least make an argument that's more bullish, and definitely more than the other market. Why? because you now have a pattern of higher lows, higher highs, and unlike the Dow, and I'll come back to the Dow, Dow's under the 18-day average, you're over it. So that becomes your support. What you don't want to get under is 2348.75. I said that wrong. 2348.75. And if the market can extend, maybe you can get up to the upper Bollinger Band. In a different world, we have the NASDAQ, which has been the strongest of the markets. And it is now overbought. It has gone from the lower Bollinger Band to the higher. And the odds favor it is not going to push out these upper bands, and it's going to pull back. You got a whole mishmash in this market. You get to the Russell, it is at least in an uptrend like the Dow. It's got the higher lows, higher highs, a lot more risk than the Dow. If you were to buy at 1366, you've got to risk back to 1332. That's a 30-point risk, almost $1,500 on a futures contract. So more markets than not are in an uptrend, the NASDAQ, the Russell, and the Dow. The S&P is nothing, but you're overbought in the NASDAQ, and the Dow and the Russell are at least the two cleanest looking of the charts. This whole failure in the market came about, as I keep saying, 3 days ago, and that took the market down, and that was the ugly part. In the 30-year bonds, you lost the embedded reading today. That's a big problem. I was looking at that for putting out in my newsletters, and I said, you know, it won't take much math for that to be lost. And you lost it on the close today. That's a sign that price and the 18-day average should come together, or price and the 100-day average, since it's the closest. So we got to pay attention to which one of the two that might be. The same exact things taking place in the 10-year notes, the 100-day and the 18, trying to come together there. And that puts me into the point of wondering, by the way, in those markets, was that the rally? You know, we keep hearing the Fed's going to raise interest rates at least 2 more times this year, maybe 3, according to some of the Fed governors. Well, we've had a big rally from 2.6% down here to 2.39 or whatever it's been, and now the market's gaining some of that back. Was this the rally? I don't know. In the dollar index, here you go with the market that this was Tuesday. You lose the embedded reading yesterday. Unfortunately, if you're a bear, you got to hang in to see is it going to fail and re-embed or not. If it doesn't, the odds favor you're going to the 18-day average of closes. You went there today right on the close of the day. As you look at the euro currency, it's the flip-flop. The market now is sliced through the 18 and the 100-day average of closes. Momentum is pointing down. The market is just suddenly tossed in the towel here, and everything suddenly favors the dollar. The British pound, well, it's got no trend. It has nothing. It's got a higher high and lower low, and battleground has suddenly become the 100-day average of closes, not the 18, the 100. The market is overbought. The odds do not favor continuation on that type of pattern to the upside. And in the Japanese yen, a couple of things have happened here. You just had a bullish crossover again where the 18-day average got over the 100. Do you see that? Fighting it and slapping it around in the face, it's going, hey, I lost my embedded reading. Prices should go down to the 18-day average of closes. That's important. But also keep in the back of your mind that this market has been under the 100-day average all this time. You have to go back into mid-year last year before that happened, and you suddenly got over it, and now you're getting a bullish crossover. It's an interesting signal that means longer term, this market's still looking good, and even if it corrects here, I would expect to see formidable support between 88.93 and 89.07. In crude oil, my argument, of course, is the joke as to what's going on with the Saudis, saying to Russia, hey, just cut your crude production. You never did honor your 300,000. Can you honor 250,000? If you could, we'll keep more oil off the market. I'll absorb your 50,000. Remember, they had a whole math if they did the 300,000. Therefore, the market is saying Saudi's in trouble. They're willing to support everything. More bullish on the crude at this point. Gasoline, this is where I expect the resistance, folks, between the upper Bollinger Band and that 100-day average in an overbought condition. I contend this is where the pros will do some lightening up of their positions. Nat gas, Nat gas is developing an embedded reading. Back here, in looking back, was probably the bottom of this season. That's my guess, okay? Doesn't mean I'm right. Support's coming in at the 100-day average, which normally staying over that easily isn't the, it's not the easiest thing on the first runs against it, but it's really not the first run. It's done it several times here, and we might be getting at that inflection point where this market is not going back into these levels for a long time. Something for you to consider. Let's talk about what I want to give you, and it's Modern Trader Magazine, a one-year subscription. Now, that's what the articles look like. This is the articles in the April issue, the symmetric patterns, the triangle patterns that you look for. This is what Market Focus comes in every day with news stories, a bunch of them that you can read from their authors. Now, let me explain how this works. You can go to Modern Trader, Google it, go to their website, buy it. I welcome you to do it. They'd love you to do it, and I'd like you to do that for them. You'll pay $79.95. Maybe you can get a small discount from them. From us, it's free. It's not the printed version that we can send you. It's only the email version. That's my deal with them, and that's fine. It's still a big savings for you, and you get all of this. Now, it comes with a reader built in. So I have one of these 24-inch screens, and I just read it like a magazine, simple as can be. You get all these neat things. It's for ETFs, the stock market, derivative trading, FX trading. Everything's covered in it. Call us. Go to the website. You'll see our carousel of free offers. Click up here. If you're watching me on YouTube, you'll see that icon. Fill out the form. We'll take it the rest of the way. Have a great day. I'm Ira Epstein.